Hello, everyone. Today I have a very special guest with me. This is Martine Newman for Mortgage Direct. Martine has been helping many of our clients over the years with the mortgage process. Not everyone needs a mortgage for their purchase, but when they do, the mortgage process in Spain is a little bit different, and Martine has been amazing. This is not just my opinion, but generally feedback from all our clients. So I'd like to introduce to you Martine, and can you tell us a little bit about yourself and your background with mortgage industry?
Yes, of course. Lovely to be here, Dixie, and it's really nice to see you in person because we work so remotely. It's difficult to connect visually sometimes, so great to see you. Ever since I left school, I actually started in the finance sector in the UK. I got a job with Lloyds Bank, and I progressed up the ranks from a teenager into my adult life, starting with personal loans, moving to second mortgages, and then purchases. So it's been ingrained in me for as long as I can remember. I took a 5-year break when we moved to Canada for a short time, and then being back in Europe, I picked up the mortgage side of things again. Now living in Spain, so so it's been a long time in mortgages.
Well, it shows because I think the clients can also sense the passion that you have when you take on the process and the way you manage the whole application. And this proves very successful for the clients that we have introduced you. But I think is more importantly is if you could briefly talk to everyone about the mortgage process in Spain, which is obviously a little bit different from the rest of the UK and other European countries.
Yeah, so the mortgage process, I can only speak to the differences with the UK and what my clients tell me in Europe, but the main difference is that it's really a good idea to get a mortgage in place before you really start narrowing down properties, because a lot of my clients say, oh, well, it's, I expected this or I expected that. It can be quite different. And most people don't remember that they're buying a secondary property. So in Spain, the banks know that it's a second property or a holiday home. So the criteria is tighter. It's not your first residence. So we need to bear that in mind when we're looking at an application. So criteria is tighter for sure. The debt to income calculations are worked out differently, and they are a lot stricter. But the process would be to fill out the affordability form that I have, and then I can go through it. I've been doing this job long enough now to be able to tell which banks would agree to a mortgage, or whether we need to change anything. There may be a credit card that we need to pay off so that it fits affordability, or we need to get more ducks in a row before you make a full application. So it's imperative that is the first stage of the mortgage application, filling the affordability form. And then once we have that back, then I can start sending out some different bank options, and go through the conditions and the rates at the time. So there's no real pre-qualification. That's the thing that I would do. But whenever we send an application to the bank, it's for a full offer. They don't do decision in principles or pre-underwriting. It's literally all or nothing for them. So we would get all the paperwork together and then wait for a decision from the bank.
Well, that's really interesting. You've actually covered a lot of the questions that I had for the clients. I think the most important part here is when the client is ready. Sometimes the clients need to know if the mortgage is going to be approved or pre-approved in order for them to make a decision. We have type of reservations that are subject to mortgage approval. So it is important that they understand how this process works. I know from the previous experiences of clients that we have introduced that you work with different banks to try and offer the best package for the clients. Can I ask what are the type of loans that are offered to the clients here in Spain, please?
Mm-hmm. Yeah, so there are only repayment mortgages. So the banks here in Spain don't do any interest only, as us Brits, once knew back in the UK. Yeah, so they're all repayment mortgages, and they do anything from a residential purchase to a commercial purchase. Now, there are no buy-to-let mortgages here. They are considered commercial, which means the debt to income is tighter, the loan to value is tighter, even the term is shorter on a mortgage. So the way that we would place it with the banks, unless you were going to be renting it out on a full-time basis, we would put it as a second residence, and then that way the banks would work out the more preferential and the more preferable rates and criteria. So, we can then get a loan for 70% of the value of the property as opposed to 50%, which is a commercial let.
That is a really good comment, because a lot of our clients are always asking us what is the percentage that they can borrow. As you know, most of our clients are international clients, and it's not clear whether they can borrow 60 or up to 70%, which sometimes we see advertised. Can you confirm that that is the case?
Yeah, absolutely. We've got banks that do lend 70%. Again, this is something that if the affordability form is completed, I can work out exactly whether the criteria would fit on a 70% loan. But I do have a number of banks that will consider that. Otherwise, it would be 60%, and then it even drops down to 50% for commercial purchasing.
Well, excellent. So the big question of the moment is, what are the interest rates?
Well, that's a bit of a loaded question. The banks here will give the rates on the merits of the application. So if you have really good debt to income ratio, the loan to value is low, you've been in your job for a long time, you're very stable in your situation, then the banks will reward you with a lower rate. They also will give you bonus products to bring the rate down, things like home insurance, life insurance, home alarms, but they all come with an extra monthly cost, so we need to weigh up whether those items are worth the extra discount on the rate. But I would say anything between kind of 2.5% and 3.5% at the moment. The banks will generally fix the rate for the first year, and then it will go on to the variable rate, or some of the banks can fix it for the full length of the term. They don't do anything in between. There's no 5 or 10 or 15-year fixed rates.
Very good. I think it's quite important to let the clients know how long the mortgage application process lasts. And I bring this up because sometimes clients are ready to do a reservation and they need to know when they're going to commit for the second part. So how much time do you feel they need to be aware of the process so that they can make that decision?
Yeah, okay. So once we get the affordability form back and we have a conversation about which banks we could approach and whether the client's happy with the suggestions, then we will get all the information and the paperwork from the clients and then send it to the banks. Coming up now, December and August are always going to be slower months for the banks because they take their vacations. So we have to be patient with them. But generally speaking, most banks will get back to us within 7 to 10 working days. We should get some feedback. They might have a couple of questions, but quite often they will just issue the mortgage offer at that stage. If you fill in the affordability form and I don't think a mortgage is possible, then there's a good chance that the banks would decline the application. I would only start the mortgage process with all your paperwork if I thought there was a good chance of getting the mortgage offer.
Well, that's perfect. I think we've actually covered a lot of the information that they need to be aware of before they make a decision. What sort of tips would you give our clients, Martine?
Yeah, so again, try not to rush into it. I know it's very seducing. You come over and the sun's shining, the sea's warm, and then you just start looking at properties in windows or online. And then suddenly, before you know it, you pay 10%, and everybody's rushing around trying to get finance. So I think from day one, the affordability form is paramount. It doesn't matter, if it's not 100% completed. As long as I've got most of it, most of the information, we can troubleshoot any areas that need it. But yeah, so don't just assume that you will qualify for a mortgage. I've shocked a few people over the years with, different points of criteria here. So yeah, definitely get the affordability form done. And then, once we have that information, you can start maybe more seriously looking at properties. But I still really wouldn't recommend putting a big deposit down on a property until we have the nod from the banks. Because it's a lot of money that you could lose if the deposit's non-refundable, which it can be in most cases, I think.
Well, that is excellent advice. And as an agency, we would never recommend a client to make a fast decision. But for that sort of situation, when you actually have to commit because you don't want to lose a property, we can do a reservation subject to mortgage. And then that way, it's a win-win situation for everyone. Well, thank you for that, Martine. I think the whole interview has been very successful. If anybody has any other questions, obviously you can get in touch with Martine directly. I think we've got a QR code ready for direct contact with Mortgage Direct. And obviously, if you have any questions for us as well, please contact us. Thank you.
Thank you, Dixie.